Let's now connect with Nigel Chalk, Head of Emerging Market Research, Head of Emerging Market Asia Research with Barclays. Nigel, good morning. Thank you for joining us. Nigel, how do you view growth in emerging Asian markets in 2013? Do you see demand picking up, or do you see high inflation really having a big impact?
Yeah, we generally see a better growth picture this year than last year. Our expectation is that growth really bottomed out in Asia in the third quarter of last year, and since then we've seen sequentially better data. This has been particularly true in North Asia, in China, in Korea and in Taiwan. That's where we see the greatest growth recovery. We see a much more sluggish recovery in India, and in the ASEAN economies they've been doing quite well through the last cycle, and we think that strong growth performance is going to continue into this year. Overall, our expectation is that growth in emerging Asia will go from 6.25% from last year up to about 6.75% this year. So that's a pretty decent growth environment given the very weak global environment.
Right. Nigel, for emerging market Asia, what kind of monetary policy easing do you expect over 2013? How will the same impact global liquidity according to you as well?
Well, generally across emerging Asia, as you know, many of the central banks in the region loosened policy through last year in the context of a weak global environment. And so now we expect that with that very accommodative monetary conditions already in place, the central banks across Asia are actually going to be on hold for most of this year. There are a few exceptions. India is one where they didn't loosen policy. They loosened policy in April of last year, but since then haven't loosened policy. And now the inflation is starting to come down. We think that's opened the door for the central bank in India to start loosening policy, providing a little more stimulus to an economy that's growing very weakly. You saw that in the last policy meeting. We think that will continue through the course of this year. You'll see looser policy in India. And then at the other extreme, I think, is the ASEAN economies. As I said, they've been growing very strongly through the course of this year. We're going to start seeing a little bit more inflationary pressure in some of those ASEAN economies later this year. And so our expectation is by about the fourth quarter, you might see monetary policy tightening in Malaysia and perhaps the Philippines, just because of a rising inflationary pressures.
Nigel, so what are expectations from Reserve Bank of India in terms of repo and CRR cut over the next 6 to 12 months?
Yeah, so I think RBI is the one distinct central bank who's in a definitely easing cycle through the course of this year. Growth has been very poor, particularly relative to their historical averages, and you start seeing inflation, although still relatively high in level terms, has been coming down over the last 2 or 3 months in the inflation prints. This opened the door in January for the central bank to start loosening monetary policy. We think that monetary policy loosening will continue. In January, they lowered both the CRR rate and the repo rate. We expect CRR rates basically going to be on hold, but the repo rate will come down another 75 basis points by mid-year.
So do you think with retail inflation remaining sticky and high, the current account deficit, that is, RBI's focus will now tilt towards managing inflation over the second half of FY13 rather than growth?
Well, I think once they've gone through this easing cycle and brought rates down, I think they'll then stay on hold. They do seem to have been much more focused on the concern about the current account in their last policy statement. There was more mention of the current account deficit, and I think that is definitely a concern. It's putting downward pressure on the currency. They're being helped a lot recently by just the ample supply of global liquidity, which is helping capital inflows, particularly into the equity market. But I think the current account is going to remain a concern, and the absolute level of inflation, although the dynamics coming down, the level of inflation is probably going to constrain much more policy loosening from the RBI.
Nigel, now Indian bond yields have softened. When do you see the 10-year bond yields, or how do you see the 10-year paper now to move in next 6 to 12 months?
Yeah, so we like the bonds in India. We think it's, if you look around Asia, it's the one economy where you have a high yield bond, where you have prospects for monetary loosening, and where you have a central bank that's relatively hands-off in terms of management of the currency. So we think the bonds are a good investment in India. The problem is it's quite difficult to get in there because of the capital controls. But those banks and investors that have the FII quota and are able to access the domestic bond market, we think that you should see yields coming down to around 7.25% on the 10-year bond.
Okay, Nigel, appreciate you taking the time out and joining us.